Hello guys, Steven Dax here. Welcome to this new YouTube episode. Today we're going to talk about risk management and how to really scan for the right stocks to trade. So before I start this video, make sure to click the like button and subscribe. And also I'm going to tell you a little bit about myself and how did I really start to develop a method of finding the correct stock for me that's fitting my own strategy. So back in 2016, I was taught that pretty much all stocks under 10 is called a penny stocks. So every morning, anytime between 8 to 9:30, I will scan for the stocks that is under 10, and which is over 70% or 100%. I will find the stock that is over 70%. I will look at the stock price. At that time, I wasn't very careful with the stock price itself. So I was sizing in about same amount of shares in stock around $1, stocks around $2, or even $7. I don't really realize that I'm sizing in completely different size in different stocks. What I usually learned about penny stocks is the lower the price is, the more volatile it is. And that's completely wrong because when you are looking at a $5 stock sometimes and the flow is around, let's say 300K or 500K, the stocks can jump around 20 to 30% in one candle. And that can have equal volatility or more volatility compared to the stock is around 50 cents. It's all dependent on the flow and how much demand for that stock at that time. So never look at stock prices and try to decide how much money you should size it into. It's all based on the volume and the flow. So that's a number one mistake I usually made when I was a beginner. Now the second mistake I usually made is when I trade about $5 to $7 stock, if I'm losing around 40 cents, 50 cents, and if I'm trading that type of stock for a while, you kind of have to develop a habit, and you are so used to that 40 to 50 cents risk in your head. As soon as you go back and trade that $1, $2 stock, or even under one, then that 40 to 50 cents can equal 50% of your risk. So for 50 cents on a $5 stock is about 10% risk, but 50 cents for 50 cent stocks is about 100%. So that's completely different. They're not aware of the stock prices can affect their risk a large amount. So that will be the two things you should be able to notice when you're trading a stock. And it's really important for beginners, very easy mistakes to make. So that will be my two, I would say, most important, my own beginner mistakes. I don't know if you guys are having some more troubles with different risk management. So I will be covering risk management for the next section of this video. But if you have any questions other than risk management and you have trouble to go through as a beginner, make sure to leave a comment below. I will be able to respond to you and find a solution for you. So next part, risk management. It is also very important for beginners as well. As I talked about, 50 cents for $5 stock, 50 cents for 50 cent stocks is a completely different risk management. So after I found that type of mistakes, I tend to try to shrink my criteria. So I will try to look for stocks around 3 to 10 because I don't really like stocks under 3. So I'm dealing with 50 cents on $5 stock and 50 cents on $3 stock. It's much easier to calculate, and when the trades come in really fast, I can still be able to follow the trade and reading the level 2s and calculating my risk in my head. But if the trade comes really quick, I'm jumping from $5 to 50 cents, and it also delays my entry time. So that will be something that I don't really like about, and I stopped trading stocks under 3 completely for the last 2 to 3 years, and it actually increased my winning percentage. Also, my trade looks much cleaner. I'm not trading 100,000 shares and 300,000 shares in one trade, because when the stock is really low priced and you have to trade a lot of shares to make some type of profit, and some of the brokerage just charge way too much borrow fees altogether. So for beginners, not really recommended. I would like to stay anywhere between $3 or above. So that will be my personal suggestions for how to really scan in terms of price range. And let's talk about how to really scan for upper range stocks. After about 1 or 2 years, when you are looking at stocks, I tend to see that some of the stocks can go over $10 in one day. So let's say we have a $2 ticker, and in the next morning it gapped over to 15, so it was up 700%. And as I said, people don't really trade stocks above 10 because it doesn't really consider as a penny stock no more. A lot of people tend to avoid that, but those type of pattern or ticker that's above $15 in one day is actually tradable if it creates its own range. Now, what do I mean by that? Because the stock went from $2 to $15, it increased about 700%. It created range for you to short into. And if the initial cap is really low, which starts anywhere between 100 million market cap or under, and it's viable for you to trade. And what's the thoughts behind why, if the market cap is under 100 million and is viable to trade if the stock goes over than 10. So think about it like this way. If the stock is starting around $2 and the market cap is under 100 million, as we normally see that pretty much all company lands in penny stock industry, 99% of them are garbage company, which has a really bad fundamentals. Pretty much all volatility was created on that stocks will eventually go to zero. When you are looking at in terms of penny stocks, you have to look at in terms of initial market cap range, which that's not very much beginner tend to look at. Market cap range, if it stays under 100 million, no matter how far it spikes to $20 to $30, it is still garbage stocks and you will still go back to zero. And this is when I set to my scanner from $2 to $50 is to scan for stocks that have some type of exceptions that can go from 2 to 20 in one day, and especially in pre-market. So those are the methods I use to scan for stocks. There's a couple recommendations. Let me just put them all together. First one will be tend to avoid stocks that is under 3, and also tend to avoid stocks using OTC market. And if you're really good with your executions and you're confident with it, you can do it. But for most of the beginners, you can't really catch the top. It's really difficult to get your execution really good. So that would be something that I personally experienced. And also, if the initial market cap starts under 100 million and it goes over 10, it is still considered as a penny stock and still lands in that penny stock industry. Including all that method, that will be all my method for my current scanners for now. And I also talked about all the concepts behind it. So if you have any opinions, please leave a comment below. And thank you for watching this video. Make sure to drop a like button and I'll see you guys in the next time.